Let's Talk Money Moves with Nia, your new favorite spot to have real, down-to-earth discussions about all things personal finance. I'm Nia, your Chief Learning Officer, and this show is about making money conversations normal. We're creating a space to break down money moves together without judgment or pressure. Whether you're seasoned or just starting your journey to financial stability, we got something for everyone. My financial family will tap in sometimes just to share their knowledge and experiences, all to show you how to get your life right with money. So grab a drink and a blanket and let's talk about it. What's up? What's up? Doing a surprise live today. And it is the last day of National Home Buyers Month. So I literally just got home, just walked through the door. I'm hot because I was running, but I wanted to come on here for this last day of National Home Buyers Month and do my last live on the topic. So today, if you don't know me, I'm Nia. I drop down-to-earth money and home buying tips for high-achieving women seeking the financial stability they desire and deserve. I'm a certified financial education instructor, 3 times author, and real estate investor. So today we'll be reading from my book, Life is Short, Buy the House. We will be reading from this book and talking about different topics about home ownership. So come in, let me know where you're chiming in from. Like, follow, subscribe on whatever channel you may be watching this on, and let's get into it. So I'm not going to hold you for a long time, but I just wanted to close out National Home Buyer Month with a bang. So let's go through how much money have you had saved. So saving money is also a part of the home buying process. Saving that are needed for the different fees, down payments, prepays, closing costs, repairs, and replacements, to be exact. One of the biggest mistakes a lot of home buyers make is only saving enough for their down payment. The first problem with that is the exact amount of the down payment is unknown until it's almost time to get your keys. The other problem with that is there are additional costs associated with the home buying process, and not to mention the money that's needed for repairs and replacements, moving, or all of those different fees afterwards. A down payment is defined as the amount of money that is owed out of pocket when obtaining a loan. So it's usually going to be based on a percentage of the total cost of your property or the total cost of your loan amount. So let's say, for example, you have a $100,000 property and they tell you need a 10% down payment. That means you're going to need 10% of that $100,000. And that's the down payment that you're going to have. So now your loan is only going to be for $93,000. So think about it. How would you feel if your refrigerator stopped working the day after you moved into your home and you had no money to cover it? And that sounds extreme, and it sounds like I'm giving a harsh example, but this is things that realistically happen when you purchase. I mean, even with renting an apartment, how many times have you moved into an apartment and something wasn't working when you moved in, even though you walked the apartment before you purchased it? So that sounds extreme, but ask any homeowner about expenses during and immediately after your home buying process. Most likely, they put it on a credit card or find a store to finance it. What will happen as a result of that, though, is if you don't have the funds to pay it back quickly, now, before even getting comfortable in paying your new mortgage, your debts are higher. So you've now increased the amount of claims on your paycheck. And this usually is the beginning of a vicious cycle. Most likely you'll be down this road before, and it's usually filled with a lot of robbing Peter to pay Paul, financing a lot of things, which creates that paycheck to paycheck lifestyle until you just ultimately drowning in debt and desperately searching for a life vest. So it's really important to make sure that you are looking at it. So we had a mortgage broker on Thursday, and she said the best thing for you to do is if you're looking to purchase, you want to make sure you save at least 6% of whatever the amount of home is that you're looking to purchase. So if you want to purchase a $400,000 property, you want to make sure you save 6% of that. And you're looking at saving that amount to be part of your down payment, closing costs. So another part of this chapter is I go through the different fees that are associated with this. And again, if you're here, you have questions while I'm reading any of this, you got questions about buying a house or you're looking to buy a house and you have questions, I will say I'm not a realtor. I'm not a loan officer. I'm not a mortgage broker. I'm a financial educator. So I help people learn how to prepare their finances when they're looking to purchase a home. And it could be you're preparing to purchase a home in 2 years. That timeline is up to you and your finances and your financial situation. You should buy a home because you want to purchase a home. Feel free to drop your questions and then let me know if you let me know where you are. Okay, the purpose of this book is to prevent people from basically walking into this situation not having enough money. I want to help individuals avoid critical mistakes that lead to a debt-filled destination. I'm on a mission to create financially healthy and educated homeowners. Far too often, we jumped into the home buying process without thinking of any of this. So please make sure to save money. Saving is also a good way to build up good financial habits. So typically when you save money, and a lot of people will tell you like, oh, well, you can get this loan, no money down, or you can get this no money down. Sometimes it's not only about getting a loan or not being able to get the loan. It's about the good habits that you have to build while you are starting to save money. Those habits include being okay with delayed gratification, being able to actually have money in the bank to prepare you for an emergency. A lot of times those are the things that you need to prepare for and you need to prepare yourself for. So it's good to have savings in order to be able to do that. But while you're building savings, it's going to give you some of those good financial habits. You're going to learn what your budget is. You'll learn how much money you have left over after paying your bills. These are just some reasons why you might want to save. Okay. So please make sure to save money. Saving is also a good way to build up financial habits. Like I said, it builds better spending habits, sometimes even a budgeting ease. So to meet saving goals, stick to your budget at least some of the time. I don't think that we should strive for perfection. I think that's another problem that we face and that we deal with. Why am I sweating so bad? I think it's because I just ran in the house. I think that's another problem that we face and why we struggle with our finances. Whenever we have something and maybe we are not where we think we should be, sometimes we beat ourselves up, or sometimes we might not treat ourselves badly, but we might look down or be angry with ourselves. And we have to understand that we're not going to be perfect on this journey. It's going to be a process. Okay. So these are the skills that are going to help you pay the bills in your new house. That's the point of this. These skills that you build while you're saving up this money is going to help you create that money that'll be there and ready whenever you need to repair something in your house. You have something that needs just regular maintenance, like your air ducts. They need to be cleaned. You can't just continue to have that dirt. You see what I'm saying? Things like that. So while the loan officer, the realtor, the home inspector, and attorney, they're there to help you get the home. My job as the financial educator, I want to help you stay in the home. So I'm going to be real with you. Regardless of what book you read or what you do or how you prepare, ish happens. Okay. So we all know this. So I need you to get your wallet with the program and be ready for some things to happen. Having a savings will create wiggle room when the shit hit the fan. And that's literally what the book said, because I keep it real. I'm very personable and realistic. Any book I write, it's going to feel like you're talking to me. So here are some of the fees that you can expect during your home buying process. Let me just wipe my forehead because I just ran from my cousin's house and baby. But here are some of the fees that you can expect when you're going through the home buying process. You're going to have to pay prorated property taxes, which basically means like if you buy the house in September, you're going to have to pay the taxes for the rest of that year, because depending on where you live, taxes come in 2 different installments and you're going to have to pay them. You're going to have to pay loan origination fees, which is basically the fee you are paying the lender for originating the loan. Then you're going to have home insurance. You typically will have to have home insurance for the first year. So this might, depending on the market, I've seen it where you had to show up with the money order and pay the home insurance for the first year. I've also seen it where it's been a part of the closing costs and then they pay that out as a part of the process. I've seen it in both ways. Title fees. So you have a title company that's a part of the process. They're an impartial party. They handle a lot of the funds. They do the title search sometimes to make sure that there's no liens on the property and that it's free and clear for you to purchase it, and to make sure that the person who is selling it does have the right to sell it. Appraisal. The bank is going to order an appraisal to see what the property costs, but you will be responsible for that appraisal. Then you have earnest money. So you see what I'm saying? You see all these fees. This is why you want to make sure you're saving more than just your down payment, because these are a lot of the fees that we don't know that we have to pay when we are buying a home. Okay. So earnest money is typically money that you give up front when you purchase the home. When you find a house that you like, you're going to put an offer on it. If the seller, the person selling the house, accepts that offer, then you're going to have to issue some earnest money. And it's kind of like basically saying, like, I'm not just playing, I'm serious. I really intend to buy this property. It's like putting your money where your mouth is. It's not only just signing saying you're going to buy the property, it's giving money in good faith. But it's good to know that that earnest money is not a gift. That money will come off whatever the amount is that you owe in this loan transaction. So if you give $3,000, when you get your final paperwork, they will subtract that $3,000 after they calculate the total that you owe. So it's not you giving a gift to the seller. It does play as a part of the transaction. Then you have other inspections that you might need. You have the regular home inspection that you will get, but you also might need additional inspections. You might need a termite inspection, depending on which market you purchased the home in. You might need a radon inspection. You might need a lead inspection. Like, it's just different inspections that you might have to get. There's no guarantee you will only get the regular home inspection. So that's another reason why you want to have funds ready for that purchase. Then closing costs, the actual costs. Like, a lot of these things that I mentioned are a part of the closing costs, but it's a list of fees, and they'll give you probably 3 days before, I believe is the law, that you have to get it 3 days before your closing date so that you can review, and it will list out all of the fees that are associated with your transaction. It will give you a loan estimate and a closing disclosure. The closing disclosure is meant to disclose everything financially that's associated with the loan. So you'll get to see everything that's going to be a part of your closing fee, how much money you need to have at the closing table, what if you had any money that the seller might have given you towards the transaction. It will detail all of those things. So you want to read that carefully. And if you can't understand it, that's a great thing to talk about to your attorney. Then you're going to get the loan estimate. The loan estimate is going to let you know exactly what you're signing up for. So I'm signing up to make this payment. I'm borrowing this much. It's going to be at this much interest. And this is how much I'm going to pay at the end of the life of the loan if I pay that regular loan payment every month and I don't deviate and pay more or anything like that. Okay. Then, depending on where you are purchasing that, I feel like a pastor. I ain't gonna lie, I feel like a pastor. I've been running all day, but I wanted to get this live out because I know this is the last day of Home Buyer Month. But then you might have HOA fees. If you purchase in a condo, or you purchase in a co-op or some type of townhome community that has HOA fees, then you might have additional fees that you have to pay, and that also will be included in that. And I do want to remind you, I'm not trying to discourage you or scare you. I really just want to make sure that you are understanding why only saving for your down payment will not be enough. Down payments are determined by the type of the loan. For example, FHA loans have a minimum of 3.5% down payment, while conventional loans have a minimum of 3% down payment, but can go all the way up to 20%. That doesn't guarantee that's what the down payment will be. So I recommend choosing the loan type and lender that fits your financial situation. Down payment assistance programs are available, but they're also not guaranteed. You also want to think about, a lot of down payment assistance programs have a lot of criteria that you must meet in order to qualify for that down payment assistance. That down payment assistance might have a higher interest rate as well. It might have a higher credit requirement. So they might require your credit score to be higher because you're getting that down payment assistance. So these are all things you want to consider when you're considering, and somebody's saying, oh, we're giving $30,000. What's the details? What's the rules? What does my credit score have to be? Is there any rules or any length of time that I have to stay in this property because I'm getting this down payment assistance? Because some down payment assistance have residency requirements where you have to stay there for 5 years. Otherwise, the money is not forgivable. They have different terms, and it's a lot of different down payment assistance programs out there. So you want to make sure you get the full details to know what you are signing up for. Okay. So I usually recommend that a borrower save 6 to 10%. The mortgage broker the other day said 6%, but y'all know I'm the financial educator, so I want you to be safe and comfortable in your property. So I recommend, even if you're getting an FHA loan and only putting 3.5% down, I highly recommend that you save 6 to 10% to cover down payment, closing costs. For example, if you're buying a $300,000 house, for an FHA loan, I would save about $24,000 or more. Even if all of it is not used, the money will become part of your emergency fund for repairs and replacements. So if all of the money is not used, or if you get down payment assistance, guess what? Now you're moving into your house much more comfortable, because let's not forget, after you close, now you got to pay to move. Let's not forget, okay? So there's many down payment assistance programs, and it's very common to bring much less to the closing table. However, you want to have money in reserves to make sure you are prepared for whatever. You don't want to do something strange for some change just to get a furnace replaced. I'm just saying. For me personally, I tell my story about when I purchased an investment property. I purchased my investment property in 2020 of November. During my inspection, I was told by my inspector that my water heater was making a gurgling noise. He said that's usually a noise that the water heater makes when it's on its way out the door. Well, I live in Chicago and my property is close to Chicago. So during the winter, the last thing as a tenant, and I'm not trying to be no slumlord, so I thought about it in the eyes of my tenant. I don't want to deal with my water heater going out in smack dab of winter. And then thinking about it as a landlord, do I want to have to pay somebody the very high fee that I will have to pay if I have to hire them to come out in the middle of winter to fix my water heater? It's going to be very much more expensive. So what I did, as soon as I closed, I paid and bought a new water heater and had it put in the property while I was getting it tenant ready. So again, I wasn't expecting to have to buy that water heater, but luckily I had money saved. So I was able to purchase it, get it in there so I can get a tenant in as soon as possible. If you're buying a property and you have a tenant, you want to be strategizing, and you plan to have a tenant, or you plan to rent it out. You want to be strategizing on how fast, what your timeline is of when you will be getting a tenant in there. You see what I'm saying? Okay, so we're going to go to another part of the book. Okay, let's go to what? No, we're not going to do that one. I know exactly which one we're going to do. We're going to close out National Home Buyer Month with a bang. We're going to do 10 things not to do while navigating the home buying process. This is my book again, Life is Short by the House, that I am reading from. You can find it on Amazon, or if you would like the link, please definitely comment in the chat and I will drop the link for the book. So we're going to do this chapter, and after I do this chapter, I'm going to be out. And I'm going to go enjoy my Friday night and relax for the rest of the night. So again, if you got questions, speak now or forever hold your peace tonight. So the first thing that I recommend in this book that you don't do while you're going by the home buying process, don't miss any payments. Making late payments will not only cause your credit score to drop, but it will also be identified by the loan underwriters and possibly cost you your home loan. And it'll cost you your home loan because that's a huge red flag. If I am a lender and I'm thinking about giving you $400,000, $500,000, and you can't pay these people back that you owe $1,000 on time, how you gonna pay me back on time? That's how the lender is looking at that. So it's a huge red flag. Keep all your payments current on all accounts, including credit cards, car loan, because the lender is going to look at your credit again. Just because they ran your credit when they did the pre-approval, that means nothing. They're still going to run it again before you sit at that closing table, okay? And if you have any missed payments, it might lead to you losing your home loan. Next, you want to do your research before you consolidate debt. So debt consolidation can be very tempting when you feel overwhelmed and you think that this will help you have better control over your monthly payments before buying a home. Debt consolidation consists of bringing all debt under one umbrella, which makes sense, right? That sounds like, oh, that sounds easier. I don't have to pay multiple people. I could pay one person. But you have to be mindful that there are often hidden fees in debt consolidation and interest rates that increase dramatically without a warning. So consolidation may not improve your credit the way you think. So be sure to read all the fine print, search reviews for debt consolidation companies, and see what past customers that are not plastered all over their website are saying. So look other places for reviews, not only on their website. The next part I want you to think about is sometimes these debt consolidation companies, they are negotiating. So just because they negotiate with the company and tell the company, oh, she can afford to pay this much, at the end of the day, it's the company as the creditor who you owe the money to. They have to actually agree to those terms. So I've seen clients of mine who they had tried debt consolidation, and the consolidator supposedly, quote unquote, negotiated these payments for them, but at the end of the day they hadn't accepted the payments. So they told her, oh yes, we negotiated this is what your new payment will be, this is what we calculated that you can afford, blah 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 blah. And then she started making that payment. Well, the creditor came back and said, well, we never said that's what we were accepting. You've been late because you haven't paid your full payment that you owe us, because she started paying the new payment that the debt consolidation told her. But that's kind of like they count the chicken before the egg. You can't tell me that if they haven't agreed to you paying that. This is just what you told them. It wasn't an official agreement. So now you've gotten late marks on your credit, and it's actually put you in a worse situation than it was when you started. And you got to pay them for them actually messing up your stuff. So just be very mindful. Look for realistic reviews, not necessarily always on their website. Look other places, okay? The next one is going to be avoid changing jobs. So changing jobs is not something that you should do in the middle of purchasing a home. Lenders look closely at employment history. So the purpose is to be sure that you're financially stable. Like, they want to make sure that you're capable of making the loan payments. At the end of the day, this is all about money. They want to make sure that you're going to be able to pay them their money. That's really what they're looking for. Not to be funny, but that's the reason. That's the method to their madness. Changing jobs make you look less appealing to the lender as a borrower. Now, I will say, if you change jobs in the same industry with a higher income, that might not, really mess you up. But if you change jobs, a completely different industry. So let me explain like this. If I've been working in this field for a while, I'm pretty secure in this field, I'm pretty experienced in this field. Even if something happens during my loan, I got experience and I'm marketable enough, I probably can get another job. If I just started this field, I'm not yet advanced in this. I'm just learning this field. So if something does happen, it might be a little bit more difficult for me to be able to replace this job as quickly. So typically, if you are going to be changing jobs, you want to, for one, definitely stay in the same field to create that longevity and stability. And if possible, and not all possible, which I'm pretty sure you will want to do anyway, you want to look to get more money, okay? The next thing I'm going to say is don't lease or buy a car. So without a doubt, buying a car while purchasing a home is a very common mistake. And for those of us who know about the home buying process, to us, we would never do it. But believe it or not, when you don't know, you don't know. You know what I'm saying? So a lot of people have done it, and let me explain for you why it might be a problem. So doing so is also at the top of the list of why what you shouldn't do before buying a home. Sometimes we're so excited with everything going on, and we want to get a new car to go along with our new house. Hell, it might be furniture that you want to get to put in your new house, but they're asking you to finance it. Don't do it. Don't do it. First, you got to do a budget to determine if you can afford all the new bills anyway. But unfortunately, purchasing a car can mess up your home buying plans. Your loan pre-approval was based on the state of your credit and the amount of debt at the time of pre-approval. So adding new debt will change things. So the lender's going to run your credit again. Even if they run your credit and they just see the new inquiry, they're going to inquire about the inquiry and ask you, what is this? And ask you if any new debt came as a part of that debt. So once as the part of that inquiry. So once they do that and you tell them like, oh, well, yeah, I got a car, or yeah, I got a living room set and the payment is this much, they're going to go recalculate your debt to income ratio. Now, your debt to income ratio is something that lenders use to basically make sure that you can qualify to pay for the loan. And what that means is comparing the amount of debt that you have to pay every month compared to the amount of income that you have coming in every month. And I'm just going to say that sound like a budget, but okay, we gonna do budget. We ain't talking about budgets today, but I'm just saying. So they're going to compare that to see how much of your income is taken up or has a claim on it already before they even enter this. So if we thinking about getting together and I come over here and you got all these other people over here, how many of them are here? Because if it's too many of them are here, you ain't got enough money left to pay me, so I don't have no loan for you. So I got to look and see who all else you paying. So that's what you want to think about it from the mind of the lender. I'm going to look and see who else do you owe. How well do you pay them? How well is your relationship with them? Because I'm new to this. I'm new to this crew. I'm just getting in here. So why am I going to think you automatically going to be loyal to me if you have not been loyal to any of them? So I'm trying to just break it down in simpler terms so you can kind of think about it when you're making your money moves. I'm just saying. So the next thing I would say is don't shift money around. When you're pre-approved, the approval is based on the current state of your finances. So the goal is to keep them that way, okay? Or improve them. Sometimes buyers make the mistake of shifting their money around to better position themselves, but that might be a mistake. If the lender sees you moving money around various accounts, they will ask for an explanation. You will need to give them a detailed accounting of why you moved your money around. Avoid making mistakes. Keep your money in one place until closing. It's about 30 to 45 days, people. You can be still and keep it simple. No large deposits. So money that appears suddenly in your bank account makes lenders uneasy, especially if it's an unusual activity. You usually must submit your banking statements every 30 days. So while you're going through the home buying process, you typically have to submit your last 2 paycheck stubs and your bank statements every 30 days, kind of like a rolling period. So if your new statement comes out, I personally tell my students, go ahead and just send it, because they're going to ask for it anyway. So be proactive and get it sent to them, because you want them to process your paperwork as soon as possible. And they have to because they got to look at your money and see where your money is coming. Even though you gave them your paycheck, they're going to go in your bank statement and watch that direct deposit and place out that direct deposit coming into your banking account. So that's why if you have a large deposit, they're gonna be like, well, where this money come from? This came from where? So just, do your due diligence, cross your T's and dot your I's. The next thing, of course, is don't lie on your loan application. I know you're nervous and you're really excited about the opportunity to purchase your forever home. You may have no intention of lying about your finances when you fill out a loan application, but I do have to say this. Lying on a loan application is fraud. And if the lender finds out that you misled them in any way, you will almost certainly lose your loan. Best believe they're going to verify. So the underwriter is the part of the home buying process that they gonna go check everything. If your name's spelled differently on some paperwork, they might ask you about it. They may ask you about some proof. They might ask you. So they're gonna ask questions and make sure that the money you say that you're bringing in, you're actively bringing in. They're gonna look for that rent to come out your check. They're going to look for that rent to come out of your bank account. They're going to look for your paycheck to be deposited into your bank account and verify the numbers that are on that paycheck. So with that being said, it's kind of hard to go and create a paycheck or do those things. Tell the truth. The next part is, I know we have a lot of internet gurus that tell us that we can get a lot of things removed from our credit and we can get it gone and we can just dispute everything. And by technicality, I'm not gonna lie. Yes, it is possible that you can dispute some stuff on your credit and get it removed. Hows of the ever. Lenders have other resources that they can use. They don't only use your credit reports. You think they're giving you $400,000 and they only looking at your credit report to verify your information? No, sis, they got options. They got options and they got access. So they have other tools that they can use that they can verify what you have. So what, you got your bankruptcy removed? Yes, they helped your credit score go up and helped you qualify, but they still gonna find that bankruptcy, sis. They're still going to find that child support. They're still going to find those judgments. They're still going to find those things, even if it's not on your credit report. So that's another reason not to lie and say you don't have those things, because if they find it, you might be in for some trouble. So the next one is not to overextend yourself. You remember when you received your pre-approval letter and it had, so typically when you go to purchase a home, you'll talk to a lender and they'll review your credit and your budget. I mean, not your credit. They'll review your credit, your income, your finances, and see what you're looking like. And they'll give you a pre-approval, which basically means that we possibly might want to give us some money. So when you do that, they give you a letter. Now, this is the magic letter, because this letter is going to tell the seller your realtor, this person has had their documents reviewed. It is stable enough that we might give them some money, but it's also going to include how much money that you can qualify for. They're going to say, well, oh, for a single family home, they can look up to 400,000. For a 2-unit, they can look up to this much, or, something like that. I personally say that's none of your business. And I'm going to tell you why that's none of your business. It's none of your business because when they are looking at your income and deciding that factor of how much home you can afford, they're not considering how much home you're comfortable affording, because they don't know how much home you're comfortable affording. They just met you. You know what I'm saying? They don't know how much you will be comfortable paying. Only you know that number. So you're responsible for communicating with your loan officer so that they can know what you would be comfortable paying. So they don't know that, your son got soccer practice and he go to the tournament in Florida every year and you got to pay for that. And they don't know that you like to go to your annual sorority trip with your girls every year. And you don't want to have to stop doing those things just because you buy a house. So you want to think of a number of what you would be comfortable with to be able to continue your lifestyle. Now, this again is one of the reasons I highly recommend doing a budget and saving before you purchase a house, because you want to identify what it is you would be comfortable paying based on your current finances. So that's why you don't want to extend yourself. Create that budget first. List all your current expenses. Are you comfortable with your currently bills? Determine how much home you can afford. So as I mentioned before, speak with your lender, find out what price ranges you should stay in. Living in your house poor and not having any cash is very stressful. Okay. You don't want to become a slave to your home, and then you're going to become miserable and have buyer's remorse. So next thing is, don't spend the money that you need for closing. So when you first start this process, you've saved up your down payment, and that's fine. But you don't want to spend that money while you're waiting to close, because they're going to tell you probably like 3 days beforehand, okay, this is the final number you need to have at closing. And they're going to expect you to either wire that money electronically. I feel like they do more now because, but I mean, when I bought in 2020, I still had to go get a physical check. So it just depends, on the person. Money may be tight, which can make the money you save to cover closing costs extra sexy looking back at you in your bank account, but don't do it. To be honest, you want to have extra money beyond closing costs saved so that you can prepare for any maintenance needed immediately after closing. The last thing you want is to be unable to cover closing costs when you almost have your new home. Because at that point, when they tell you how much you need to bring to the closing table, you're almost done. You're almost done. Okay, last one, and we wrapping this up. Do not co-sign for anyone or add any new credit. Now, I had to put the co-sign on there, and that's just, it might even be for in regular times, not even when you're buying a house, but we're not talking about that today. This is National Home Buyer Month. We're talking about home ownership. You don't want to co-sign for anybody else because you're basically being responsible for whether they're going to pay it on time or not. And them not paying it on time can possibly cost you your home, because that's still going to be a late payment reflected on your credit. So don't go co-sign for anybody. I'm going to still read the little paragraph. Hold on. Sorry. So anytime you apply for a credit card, a loan, or even try to sign up for a new service like a cell phone, the company you are working with will probably make a credit inquiry. So they do this to determine your credit worthiness, and the same as the mortgage company does. So if you co-sign for somebody else, it's still going to give you that new credit inquiry that you get if you went and finance something for yourself. So the lender is going to look at that, and they're possibly going to be like, she risky. He risky. Because that's what they're trying to determine. At the end of the day, they're trying to determine how risky is it to give you money? How likely are you to pay me back? So if you have any questions about anything I talked about today, again, I've been reading from my book, Life is Short, Buy the House, The Ultimate Guide to Preparing for Home Ownership. I wrote this book, like I said, I want to create some financially savvy and educated homeowners. It has home buying terms you should know in the back. I don't know if I can see that, but I have these like definitions of a lot of the different popular home buying terms: appraisal, buyer's market, billing due date, debt to income ratio, credit mix, escrow, homeowners association, closing disclosure, like defining what all those things are. And I made sure I put it in alphabetical order in the back, because when you are going through this home buying process and you talking to realtors and lenders and you seeing all these houses and you going through open houses, sometimes a lot of terms you don't know can be thrown at you. And when you don't know, even though I know your realtor and your loan officer should be there and should be able to answer all of your questions and be patient, like we've talked about this week, the reality is all of them are not going to be. And I want you to be empowered in your home buying process. I want you to be able to feel more confident as you go through this process, because you know a little bit about what's going on. Now, the first part of the book is called These Are My Confessions. And at this part, I tell you why I wrote this book, and I give you my own story of how I bought and lost my first house at the age of 27. So, I mean, I don't have time. We already have almost 40 minutes for me to get into the story. You just gonna have to buy the book. The next one is talking about preparing your finances. So I have 5 chapters in that part talking about look in the mirror, because the first place for you to look for anything is going to be within yourself. Where's your budget? Are you checking, how credit works? Leaning out your finances to prepare to take on this new mortgage or this new bill. And how much money do you need saved? The next, we go into mind-blowing decisions, where it talks about the first chapter of that part is home truly where the heart is? So basically deciding, is homeownership really for you? So in that chapter, I compare a single family to a multi-unit. I compare renting versus owning, townhome, what you need to think about when you're buying a condo, all of these things, so you can make an educated decision to decide if home ownership is something that you really want to get into. Because even though I will preach up here and yes, I wrote a book, Life is Short, Buy the House, but it's a guide to prepare you for buying a house. So it's to help you decide if home ownership is for you, because some people, home ownership truly might not be for you. And I'm a personal finance educator that's truly about you working towards what your financial goals are and whatever that looks like. I'm just here to help you. I'm just here to educate you, to empower you, to hype you up, to cheerlead for you. You know what I'm saying? And if you ask any of my students, they will tell you, I will randomly check on you and check on your financial goals, because I'm truly committed to helping you succeed. So I wanted to create a resource that kind of wrapped a lot of the things. If you found out this information, you would be on Google for hours. So next chapters, it talks about don't be a day late, a dollar short. Talks about what type of loans will be best. So like educating you on what type of different loans out there, so you can decide what loan works best with your finances. How to pick your home buying dream team. So typically when you buy a house, you have your lender, which could be a mortgage broker, or it can be a loan officer, which a mortgage broker works with multiple lenders, where a loan officer typically works with one lender. Well, unless they're a loan officer at a brokerage, then they might, but we just saying, we ain't gonna get technical today. Then you have your realtor. Your realtor is typically the person that you're going and shopping for houses with. Then you have a home inspector who's going to inspect your home. Typically, as soon as you put an offer, you have a short time period that you need to get that home inspected in order for you to say, oh, no, we're not doing this. I'm going to back out because this home didn't pass inspection. Then you have a real estate attorney, which also may be part of your process, especially if you're a new person who's buying, especially if you're buying in an HOA or purchasing a condo. So the last part of this book is it's a process book. And this one gets into the actual home buying process. So it breaks down the underwriting process, which the part I just talked about, where they go through all of your stuff and they go through, cross their T's and dot their I's and make sure all the things you put on your application are in fact true. They confirm those things and they follow the money and follow those trails to make sure that everything adds up. Then I gave you some home shopping tips and tricks, talked about not skipping the home inspection and what's included and what they do during the home inspection, and great tips to find a good home inspector. Then we talk about the closing process. I educate you on that. Then we talk about the cost of moving. What is it going to cost you to now actually move? And then, like I talked about before, the 10 home buying things not to do while you're purchasing your home. And at the end, I just have my sources. So any quotes or information that I had in here, or any information like breaking down what type of loan or things like that, that is not my information. I simply just got it from the government website and source, and I put them here and reference them just so you can get real factual information and you know that it came from a reliable source. So with that being said, does anybody have any questions? Of course, don't forget to hit that like and subscribe button. Thank you. I appreciate you for watching the channel. For those of you who are checking in on Facebook, again, I appreciate your presence as well. Drop any questions that you might have. And that's going to be it for the night. This is how we're closing out National Homebuyer Month. If you would like the book, I could drop the link to the book too. I guess I should say that. Duh. If you want the book, I can also drop the link to the book so you can purchase it. It's a nice read. And if you're somebody who's looking to purchase a home, this is going to be something that will really help you kind of get prepared and then just be educated on the process, because all this month I've been talking about homeownership, and I've gone live and talked about a lot of different things. On Monday, I went live with a realtor, and on Thursday, I went live with a mortgage broker. But if you're in my Money Master Academy, I've done that several times, and I keep bringing them back because things change, new rules come out, new loan products and things. Like, look at the interest rates. Things change, the market changes. So that's why I'm going to keep probably bringing them back. Every year, I probably will have a mortgage broker and a realtor, just because the market changes every year. So you need to be able to stay up to date with that new information. So I have not seen any more questions. I hope you all have a wonderful day. I believe I am going to, I'm going to put a link to the Amazon to buy the book. Oh no, you know what I'm gonna do? I'm gonna put a link in case somebody wants to buy the book, just so it's there, is what I'm going to do. And then after that, let me see. Oops. Is that it? Is that it? Is that it? Is that it? I'm trying to see if I got the link right or not, y'all. And this your time to ask questions while I'm trying to do this. Oh, got it. Bam. Okay. Okay. Product. So it's product. So, all right, come on. I don't know why it's playing games with me, y'all. It won't go to the regular one. Book. I don't know what the problem is. Oh, why is it not available? That's odd. That is odd. See, I just learned something. Oh, here we go. Oh, that's why. Okay. Okay. Got it. Got it. Okay, here we go. Let me drop this link, and nobody has asked any questions. So after I drop this link, I'm going to be out. Bam, link dropped. You all have a wonderful night. I appreciate you all for checking into the channel. I will see you next time.